G'day guys, Seeney here and welcome to another episode on the Australian Wealth Channel. And in this episode, we're going to be talking about what the property market might potentially look like for the rest of 2022. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So, for those of you that are interested, the property market over the last couple of years has been absolutely insane. We've seen pretty much record growth. We haven't seen growth like this in the market for a very long time. Anyone that's been invested in property basically across anywhere in Australia has done incredibly well. Now, there's a number of different reasons for this. Of course, we can point to interest rates, people valuing their time at home a little bit more. So consequently, they're looking at upgrading to larger properties and more exclusive properties in more prestigious areas. There's a number of different reasons why housing has gone up so much. On top of that, we also have supply shortages as well in terms of materials for building, which has certainly pushed prices as well. So it has been a number of different reasons. You can nearly say it's been the perfect storm. But after having all this growth, is this sustainable for the property market? And the answer is no. We're not going to see years of 20% growth year over year. It's just not healthy for the market and could end up leading to a massive crash, which no one wants. You know, slow and steady wins the race. But there is a lot of debate about what's actually going to happen in the property market for the rest of this year. So I have some thoughts on this and I have some different reasons as to why I think this. But if this is the kind of content you are interested in, please make sure you like and subscribe to this channel. We're going to be talking about property a lot in the future, and I help people to get hold of investment properties. So that is something I'm doing with this channel. So if you'd like to chat about that, then please get in touch. I'd like to help you get some investment properties and get your financial freedom under wraps. It's really hard to point to one city and say that that is the one that has done incredibly well, because they've all done incredibly well. But I am going to go through city by city and I'm going to give you my thoughts about what I personally believe is going to happen with these different cities, because the property market is not just one big market. You know, it's made up of cities, and on top of cities, it's made up of course, the suburbs, and these change drastically. You know, while one suburb in Sydney continues to grow at 10% a year, there's another suburb that might drop 10%. You know, so it's not just one big market. So I think that's really important to take into account when we're looking at these predictions. But I think these are the things on the whole that are going to happen. So we're going to start with the biggest city in Australia, and that is, of course, Sydney, which is where I live. Now, Sydney, over the last couple of years, like every city, has had absolutely phenomenal growth. And anyone that is trying to get into the Sydney market knows how ridiculously expensive it is. The median for houses here at the moment is about $1.4 million. So if you want to get just the average house in Sydney, you're going to have to lay out $1.4 million, which is a lot of money. Now, it's really important to note that going forward, interest rates are very likely to go up. The cash rate is 0.25% at the moment. There's some politicians in this country that don't actually know that, considering it hasn't moved since November 2020, but you know, there you go. Chances are this cash rate is going to increase. It's probably not going to increase dramatically, but you know, over the course of the next few months, the cash rate will increase to 0.5, 0.75, 1% and go up. So what that basically means is the cost of money is more expensive. The cost of you borrowing money to invest is going to go up. So this does a couple of different things. It means that mortgage repayments are going to be more expensive, and it means that you also won't be able to borrow as much money as you would have been able to do when the cash rate was at 0.25. And basically what this does is it puts a handbrake on the property market or any kind of lending activity. It's not going to be huge, because a cash rate of 0.5, if it goes up 25 basis points, you know, that's minuscule. That's really, really small. So, you know, this is going to probably rein in some of that insane growth that we're starting to see top out already in Sydney. So Sydney and Melbourne, I think, are quite similar in a lot of respects, and I think that they're going to be quite similar in this respect. They are starting to top out in terms of housing affordability. People just are unable to borrow any more money to help increase the prices in Sydney at this current point in time. So for the property market to continue to grow, There either needs to be a rise in wages or there needs to be a reduction in lending standards. And those are two things that are probably not going to happen. So for that reason, I think Sydney and Melbourne are especially topped out currently, and we've seen a lot of the growth that we're going to see for a little bit. Doesn't mean it couldn't grow in the future, but right this current moment, I think we'll see a bit of a stagnation. I can't see too much of a decline, maybe a few percent down here and there. But I think there's a lot of people that have been waiting on the sidelines trying to get into the market. So I think those people, if they see a couple of percent drop, are really going to help to buoy those prices up. But around the rest of the country, I think it's a little bit of a different story. Although we've seen some insane growth in Brisbane and also Adelaide, I personally believe that they still have a lot of room to run. And the reason that I believe that is because that we don't have the affordability constraints in Brisbane or Adelaide or even Perth that we have here in Sydney and also in Melbourne. Housing in Brisbane and Adelaide is significantly cheaper, and there's a lot of investor activity going on in these two cities, and for good reason. Now, the problem with Brisbane, especially at the moment, is there is an extreme shortage of houses. And what that means is that people are really desperate to bid up the prices to get into property. We're also seeing this in the rental market. In some areas, there's vacancy under 1%, which is so small. In fact, in Thornlands, the area that I have my investment property, the vacancy rate at the moment is 0.8%, which is incredibly low. So what that means is rental prices are going to be going up because people are bidding just so they can get a property, and people are just trying to buy into property no matter the cost, because there's so many people that have moved from Sydney and Melbourne. And of course, we come from a much higher starting base, so we go up there, a 4-bed house is significantly cheaper in Brisbane. So people that are moving from Sydney and Melbourne can afford to bid up those prices because prices here are so much more expensive. And when people sell up and they leave, it means that they have a lot more cash available to them. So there is still an extreme supply issue, especially in Brisbane and also in Adelaide as well. So for those reasons, I think that Brisbane and Adelaide still have plenty of room to run, and that's why I've continued to buy property in both these cities this year. It all comes down to rental vacancy and comes down to the demand for property. And in these areas, there's both of those things in absolute spades. Now, in some of the other cities, I think Canberra is probably going to continue to grow at a relatively steady rate. I don't think it's going to be insane like it used to be, but of course, Canberra is all about the public servants, and they are some of the safest jobs in this country, and they're basically guaranteed to get a pay rise every year. So I think in Canberra, you'll see progressive growth, nothing too crazy. That you might see in some of the other cities that have a lot more private business, because there's some businesses that might do incredibly well and some businesses that don't. So there's a lot more fluctuation, I would say, than in a place like Canberra. And on top of that, some of the other cities, Darwin and Perth, they're probably done. It looks like we might be getting closer to the end of the mining boom in Perth, so there might be a little bit less demand for properties over there. The mining sector is not a sector that I understand incredibly well, so for that reason, that's one of the main drivers of Perth, and that's why I don't own any investment properties over there. I do believe there are some pretty good yields in Perth for rentals, but you really need to be investing in what you understand. So if a good deal comes up, I could consider it, but most of my knowledge is with the cities that are on the East Coast and also in Adelaide. Northern Territory, who knows what's going to happen with that? I'd like to hear your thoughts about that one in the comments section. So please let me know what you think is going to happen in the cities all around Australia. I think the regions are going to continue to do fine. As more investment goes into the regions, they're going to become a lot more livable, and people will happily move there, as the property prices are a lot cheaper than they are in Sydney and Melbourne and Brisbane. So I'd like to hear your predictions. Please let me know what you reckon is going to happen with the property market. If you want to get started with investing, I'm happy to chat to people to get them on the right path to getting themselves, in order to get themselves an investment portfolio of properties. It's easier than you think it is. It's something I thought was pretty daunting at first, and now after owning 4 properties in my portfolio, the process has become quite simple. But of course, I couldn't believe, if I talked to myself about 5 years ago and said that I'd own 4 properties, I wouldn't believe it, but it's actually easier than you think. So if this is something you're interested in, please get in touch. I have my email in the description. So if you'd like to track your net worth, I have a link to WeMoney in the description. Sign up and connect an account and you'll get $5 for free, which is fantastic. It's what I use to track my net worth. So thank you guys so much for watching. Please make sure you like and subscribe. I want to hear your predictions about the property market. So my name is Seeney from the Australian Wealth Channel. Thanks so much for watching. We'll see you later. Thank you.